Do you think that you're taking full advantage of your tax deductions as a small business owner? Think again. Most small business owners are leaving money on the table, missing out on deductions that could be saving you real money. From turning your advertising into sponsorships to leveraging the Augusta Rule the right way, we're going to be breaking down in this video tax strategies that you didn't know you needed. We're going to stop overpaying and start keeping more of what you earn. You're listening to Business by the Books, the podcast that teaches you how to use your financials to manage your business. My name is Danielle Hayden, CPA and founder of Kickstart Accounting Inc., where we use bookkeeping and taxes as a vehicle to help business owners take control of their numbers. And I've helped thousands of entrepreneurs make informed financial decisions for over a decade. Today, we're going to be talking about the tax deductions that you didn't know you needed to be making in your business finances. And we're going to start at the top. What does pre-tax and post-tax mean as a small business owner? I want to use an employee as an example. When you are a W-2 employee, you are being paid with after-tax dollars. But there are things like your health insurance and your 401k that you can pay pre-tax, which is then lowering the taxes that you're paying as an employee, which therefore is lowering the gross amount or the net amount that you are taking home as an employee. Now, as business owners, we have a set of tools that we can be using to lower our net income that we are then going to be paying taxes on. So as a business owner, you are paying taxes on the net income of your business. So that is sales minus all of your cost of goods sold and operating expenses. That bottom line net income dollar, that is what you are paying taxes on as a business owner. Now, the government wants you to use deductions to minimize the amount of net income that you are going to be paying in your taxes. Now, the government gives the option to have these deductions in business or in real estate because these are things that help drive the economy. The government is giving you the tool. Now, unfortunately, the government's not going to come knocking at your door as a business owner to say, hey, you forgot this deduction, you forgot this business expense. So it's really your responsibility as a business owner to get educated and implement these tax deductions in your business so that you can minimize the amount of net income that you are paying taxes on as a business owner. Now, the goal is always to find the right mix between spending and saving. I want to be really clear. This is kind of an unpopular opinion. I don't ever want to hear that you are spending money just to minimize your taxes. Every fall, I cringe at hearing CPAs telling business owners to go spend their profit so that they don't have to pay money in taxes. When you start doing better in business, when you start doing well, you are going to be paying taxes. It is just part of our lives, especially as US citizens. We're going to be paying money in taxes. And I don't ever want a business owner making an investment in equipment, tools, vehicles, travel, conferences that do not align with their goals as a business owner. We are not spending money just for taxes. We had a client who came to us a few years ago and she was working with another CPA before working with us. And she signed on with us around like early February. And her CPA had her take a large bonus run, paying herself in December. Now, the CPA did not have a discussion with the business owner to understand what their goals were for the next year. This business owner was put in such a difficult position because she had a new store opening in March. Now, she had used her cash to run a large payroll run, and her family was so excited to have the dollars in their personal checking account that they spent the money. And there's nothing wrong with that. However, when it came time to open the new store, she ended up having to take on debt because January and February were actually her slowest season. She had a amazing November and December, spent her profits during that time on a large payroll run, hit her slow season of January, February. And when she went to go make the investment to grow and continue to invest in her business, she didn't have the cash and had to take on debt. And she's still in this debt cycle. So I'm not saying that we can't implement strategies to save money on our taxes. I want us to implement strategies that align with our goals and the future of our business. Okay. Now, what does the IRS say is technically a business expense? The IRS gives the guidelines that business expenses have to be ordinary and necessary. So it would be ordinary for somebody in your industry to spend money on that. And it is necessary in order to run the business. Now, we have an episode that just recently aired that we'll link in the show notes where we reviewed the entire income statement and all the potential business expenses that we can be taking that are ordinary and necessary in business. This podcast today is for somebody who is already in business, who is actively running their business, actively generating revenue, and ready to take on the expenses that maybe you haven't thought of in the past. So, what are those expenses that we are leaving on the table when we think about our business deductions? Again, these are not things that we need to spend over and above what we want to spend as a business owner to hit our goals, but these are ways of changing the way that we're spending money so that they can become a business deduction. So first, when we look at the income statement, I am thinking about advertising and marketing. Now, one thing that we see our clients doing frequently is making charitable contributions to their community. And for me, this is one of the biggest benefits of being a small business owner is that we get to contribute to our community in which we live in, and we get to make this really amazing impact. However, when we go to make a charitable contribution, can we turn that contribution into a sponsorship? So if you have your son or daughter's little league who is asking for a contribution, can you turn that into a small business sponsorship where you actually have your logo on the back of their t-shirts, or you are sponsoring the event for that? Now that becomes advertising for your business and turns that charitable contribution into advertising dollars, which can be 100% deducted on your business tax return. A charitable contribution flows through your personal tax return and are subject to some limitations. So turning those charitable contributions into a sponsorship is a way of getting a 100% tax deduction on those dollars. Next is uniforms. This is a huge area for our clients as small business owners. I understand the temptation to want to deduct the cost for clothing that you are wearing for a photo shoot or at work on a regular basis. Unfortunately, the IRS says that those are not actually uniforms and not technically a business expense. But the way around this, the way that we can make these dollars for our clothing is to put your logo on it. If you are wanting to buy a jacket for the winter season, if you put your logo on that jacket, that has now become a business expense and can be a uniform cost. Next is equipment and office expenses. We are all purchasing as small business owners equipment for our business. There's not very much that I can think of in my life that I am not using for my business. New AirPods, I'm using them for business. Microphone, obviously I'm using that to record the podcast. New computer, yes, that's a business expense. The camera that I'm using to record this podcast, the technology that I'm going to be using in my business, these are all things that can be a business expense. So I really want you to think through your personal expenses and what you are purchasing in terms of office expenses and equipment that you were really technically using for business. I have found working with our clients over the years that we really, depending on our risk tolerance, we're trying to leave dollars on the table because we don't want to overtake. And while I appreciate that, and I really do respect you guys, I want to make sure that we are taking the business deduction, that we are taking that business expense for any equipment. Cell phone, yes, that's a business expense. Like I said, those AirPods, business expense. What are you technically using as business? Those need to be paid with the pre-tax dollars so that you're getting the deduction. Now, as we think about gifts, we have so many limitations by the IRS in terms of gifts. Now, I went into all of that disappointing news in episode 126. So if you are thinking about giving gifts to your employees, contractors, or clients, go and give that a listen to first. But there are strategies that we can use to be able to gift as a business expense. For example, if you want to give a set of iPads to your employees, you can preload those iPads with their email, Teams, and maybe a training that you want that team member to go through. You are now gifting the iPad to that team member. However, it's been preloaded with work content so that that can be a business expense. And then you can always add your logo. So just like we did for uniforms, by adding your logo, we are able to gift our employees and contractors and clients as part of advertising and marketing for our companies. Training is another area where we are leaving money on the table. The mastermind that you're part of, the conference that you went to learn from, the coach that you have, those are all people who are working with you for training and personal development for your business. I always say that being a business owner has been the number one self-help personal growth journey that I ever could have imagined being on. And having conferences to regularly attend, to have a coach who I can regularly rely on, to be part of group masterminds are what really help us as business owners continue to grow. All of those are business expenses, but we're leaving the small ones on the table. The book that you bought, the Audible subscription, the Grammarly, those small things that we're using to learn and grow and to serve ourselves as business owners, those are business expenses.
Real quick, are you struggling with tax deductions or how much to pay yourself as a business owner? Get the How Much to Pay Yourself as a Business Owner calculator and the guide to the 6 tax tips every business owner should know. Go to kickstartaccountinginc.com/gift to simplify your financials today. Okay, back to the show.
As business owners, we cannot forget that we need to plan for our personal wealth. We need to plan for our retirement, HSA, and healthcare. And guess what, you guys? These are all ways of creating business expenses that lower our net income. Now, there are a lot of gray areas on whether or not you're an LLC or an S Corp. So I'm going to link in the show notes. For retirement planning, we have a full episode on episode 188 on all the strategies that you can use for retirement planning in your business. But this is a business expense. And if you do not have a retirement plan in place, you're thinking, well, I'm going to sell my business one day. That's my retirement plan. I want to encourage you that it's not that I think that you're not going to sell your business. I believe that every business owner, there's an opportunity for us to be able to grow and sell our businesses. However, I think it's important that we also have additional retirement and wealth planning tools in place. So episode 188, take action to make sure that you are utilizing retirement planning in your business. Next is a HSA. The HSA can be funded and grows tax-free. The HSA is a great way for you to add on to your retirement planning if you have a high deductible healthcare plan. So if you have a high deductible healthcare plan, you can use the HSA plan in order to be able to fund the future wealth of you as a business owner. Next is healthcare. Healthcare can be a business deduction for you as a business owner. Go back and listen to episode 136 for all the details on how to implement the right healthcare strategy in your business. But these are dollars that you're leaving on the table. If you do not have retirement, HSA, and healthcare deductions going through your business, these are dollars that you are leaving on the table for the IRS to collect on. Next is to pay our children. Go back, listen to episode 137, where I go through all of the details on what you need to know in order to pay your kids. Your kids can be a business expense to your business. Regardless of whether you're an LLC or an S Corp, you can pay your children. If you are an LLC, those dollars will need to be under $12,000 and can be a business expense and not taxed by your child. As an S Corp, you can still pay your kids. You're going to be enjoying the tax deduction, and they're going to start to build their wealth as a child. And your child is going to start to build their resume as a tax-paying individual. So as an S Corp, your child would go on payroll. However, you as a business owner are enjoying the benefits of having that business expense and lowering your net income. You guys get it. The idea here is, what expenses can we implement in order to lower our net income? For our kids, you're paying for so much of their lifestyle post-tax. And by paying your child, this is a way to take those dollars and make them pre-tax spending rather than post. All right, next we have the capitalization policy. The government allows us to treat large purchases up to $2,500 as a business expense this year if we have a capitalization policy. Now, as a Kickstart Accounting client, you already have a policy. Anything that's over $1,500, we capitalize on the balance sheet and depreciate over time. However, anything under $1,500, we take as a business expense. So if you go and you buy a new computer and it's $1,400, we will automatically put those business expenses in your income statement so that you are taking that tax deduction in the year that that purchase is made. And that can be a great tax strategy if this year is very profitable for you and you need that new computer, new camera, new microphone, you need those equipment costs. Those are things that when we have a profitable year, we're not going to buy the truck or we're not going to invest in tools or strategies or conferences that we don't need. But when we have profit and we know that we have equipment or specific investment needs, this capitalization policy allows us to take those expenses in the year that we're profitable rather than capitalizing them and depreciating them later in time. Next, we have travel. I've seen so many tax gurus out there encouraging small business owners to form a board of their family members so that they can take quarterly trips for board meetings and fly themselves and their family to these vacation destinations for board meetings. And look, you need to decide as a business owner your amount of risk. There are going to be times that if you want to take your family to, let's say, Disney, that you can find a conference, workshop, or seminar. And then your travel as the business owner is a tax deduction. And the time that you have that hotel stay for the conference, that has become a business deduction. And your meals during that time is a business deduction, not your family's. So a few years ago, I took my family to a conference with me. It was actually to Disneyland, and I was going to Orlando. We went 4 days early, so my flight was a tax deduction. However, I paid personally for each of my children, my spouse. Our Airbnb before the conference was paid for me from my personal funds. Once they left and I went into the conference, that's when my business paid for the hotel, meals, and the car rental during the time that I was there for the conference. Now, the IRS does say that a portion of your day needs to be spent at the conference or workshop. So maybe you're only spending 4 hours each day at the conference, and it's a longer conference that spans the time that your family will be there with you. In that case, the hotel stay, the car rental can be a business expense as long as during that time you are attending the conference, workshop, or seminar for at least 4 hours of each day. However, again, as a business owner, you need to decide on the amount of risk that you want to take with these deductions. And you need to decide on where you want to take your business in the future. For me as a business owner, I'm not trying to put every personal expense I have through my business. I'm running a business, which with employees and team members. And it's really important that I have my cash for my business set in my business checking account and that my personal funds are paying for my personal lifestyle. And I want to be able to show over time that I have a valuable business, that I have a business that generates profit. And if I am putting through every meal that I have, every vacation that I take, everything that I spend on personally, I'm going to have a very low valued business. I'm not going to have a very profitable business. I'm going to have a low profit, which means I'm not going to pay very much in taxes, but my business isn't very valuable. If I go to sell the business or I go to invest back in the business and take out a loan or a mortgage or buy a property, my business is going to be devalued because I am running my personal lifestyle through my business. And so I want to encourage you all as you're listening and as you're preparing for this tax season, what is your goal of your business? Do you want to have a valuable, profitable business? Or is this really just a game for you to reduce your taxes and to take as much as a deduction as possible? Neither answer is wrong, to be clear. Neither answer is wrong. So I want to share my story and my viewpoint on that to give you guys that reference point. We have other clients who they use their business as a way to maximize their taxes. They know that they're never going to reinvest in their business. They don't need to take on debt. They're not making any additional purchases, and they're not concentrating on building a valuable business. So for them, that is their goal and their strategy. Lastly is the Augusta Rule. The Augusta Rule allows us as business owners to rent out our home for up to 14 days. Now, this deduction has received quite a bit of popularity over the last few years, and I want to encourage us not to take it just to take it. If you have a valid rental reason, then we can take this deduction using the fair market value if somebody would have rented something in the area and that has full documentation and support. So for instance, a few years ago, I brought my team into town and we were having our leadership planning, strategy, and training conference. And rather than us going and renting out a facility or co-working space, we did part of that session in my dining room at my dining room table. So we had a valid rental reason, we had documentation and support. For me personally, as a business owner, I can't actually think of a reason why I want to have any type of rental reason for my home. This is my home. This is where I work from home. This is my office. And so for me, the Augusta Rule is not something that we will continue to take on an annual basis. However, if there is a valid rental reason, a photo shoot, a training, a very specific session, you can use the 14-day rule, but it has to be that you are taking the fair market value. If you would have gone and rented like a co-working space, and then it needs to be documented. Remember, not all spending is a business expense. We need to find the balance between showing that we have a profitable, valuable business and taxes. So yes, the photo editing software is a business expense, but maybe we stop putting every meal and vacation through our business. We are devaluing our business. So think through, what is the goal of your business? Where do you want to see yourself over the next 3, 5, 10 years? And then decide what expenses of your lifestyle that you want your business to be able to absorb for you. Again, this is finding a balance because I don't want us to leave anything on the table that could be a business deduction so that we can lower our net income and pay less in taxes. If you need help with this content, with your bookkeeping or your annual taxes, I encourage you to go to kickstartaccountinginc.com, book a call. We would love to talk to you. We'd love to have the opportunity to help you classify and categorize and stay organized, right? We need to have these transactions in the right category in order to be able to file our taxes. We need to have a money team that we can rely on to keep us compliant and to help us navigate these difficult decisions and conversations. So we would love to be your bookkeeping and tax team. I hope you enjoyed today's episode of Business by the Books. Don't forget to hit like and subscribe. This is the #1 way we can help other entrepreneurs find this podcast, because here at Kickstart Accounting Inc., it is our mission to help entrepreneurs understand their numbers, get access to this information, and grow and thrive in their business. So please help me help other entrepreneurs understand their numbers so they can finally grow and thrive.